Welcome to the cutting edge of the global awakening.
In the councils of government, we must guard against the acquisition of unwarranted influence by the military-industrial complex.
Well, it looks like the North Tower of the World Trade Center has just completely collapsed.
The U.S. dollar's status as the preeminent reserve currency is under attack.
This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America.
You really want the truth? Then just follow the money.
Welcome to Follow the Money Radio, a broadcast dedicated to your personal, spiritual, and financial liberty. And now, here's your voice of reason in the midst of global chaos, economist and best-selling author, Jerry Robinson.
Greetings, friends. Welcome to the very first show of 2014. We made it to 2014. This is our fourth year, I believe, on the air. Maybe the third year. I can't remember now. Who knows? Who cares? All that matters is that I'm here and that you're here, and that's all that matters. Welcome to Follow the Money Weekly Radio. My name is Jerry Robinson, your host, your guide, leading you on an excursion to truth right here every single week. Now, we have a whole lot to cover today. We're going to dive right in. Tom Cloud will be here with a very interesting update on precious metals. Jay Peroni will be here, as always, with his update on an investing idea. Jennifer will be here with our trading update. Before we do all of that, since it's the very first show of the beginning of the year, I want to talk about you and your financial plan. What are you doing in 2014 to make this an excellent year for not only yourself, but for your family, for your future, for your community? What are you doing to ensure and insulate yourself against what can only be called an unbelievable, unprecedented bubble that we're in? It doesn't matter if you look at the United States debt, if you take a look at the United States bond market, if you take a look at the United States stock market, or if you go overseas and take a look at the Chinese debt bubble that we talked about on Friday in our daily briefing, the $24 trillion credit bubble that has been created in China. You know all of this is not going to end well. It's just not going to end well. History tells us this. We know this from history. You cannot create the type of economy that has been created through central banking, through this fiat system that we have today, and have all of these interlinking economies that have very different aims, and then expect not to have hiccups along the way. In fact, the hiccups that we're going to see are not going to be hiccups. They're going to be full frontal assaults on you and upon your savings. And it's important that you develop a plan. And that's one of the things that we do here at Follow the Money. And that is to help you create a plan that will not break down under any circumstances. No matter what is going on in your life, you need to have a financial game plan that will not break down. Now, that sounds pretty promising. When you hear that, you say, well, how can you promise that, Jake? Well, I'm not promising anything. I'm not guaranteeing anything, but I'm telling you that the plan that I'm going to tell you about, which is called our 5 levels of financial freedom, is a time-tested, proven method of creating a financial game plan that will not break down. And over the course of the next 5 weeks, we're going to go through all 5 levels. So today we're going to talk about level 1 before we get into anything else. And level 1 is not the fun part, I would say, but I know a lot of people who, when you talk to them about their financial game plan or you find out what they're doing financially to prepare, many times they instantly think of investing. Well, I'm trading stocks, or I'm investing in this, or I'm buying this, or, well, that's not necessarily the very first step we need to take. When I was a financial advisor, I would meet with individuals many times who were very wealthy and would find the most unbelievable holes in their financial game plan, that we would have to go back and patch those holes, because otherwise they're going to be leaving themselves exposed to future complications. I'll give you an example. I was, at one point, I was meeting with a doctor. He was a financial advising client of mine, and he had a lot of money. And I was going over all of his information, not just his stock information, right? Not just his investments. When you're a holistic financial advisor, you take everything into consideration. So I wanted to see copies of his insurance. I wanted to see copies of his, estate planning documents. I wanted to know what he was doing. And I was so blown away when I took a look at his car insurance, of all things, right? You think, what's an advisor looking at car insurance for? Well, that's part of the whole game plan, isn't it? You got to look at everything holistically. If you don't have a holistic financial advisor, I would urge you to make that one of your goals in 2014. Find somebody who will help you coordinate all of your dealings in such a way where they're on your team and they're helping you create wealth, accumulate wealth. A good financial advisor does that. So I met with this doctor, and I looked at his auto insurance, and he was carrying the cheapest liability. And you see those commercials on TV. Call us, and you can save 15% or more on cars. So he had bought the state minimum liability for his automobile and was a lawsuit waiting to happen. He had so much money exposed. It was not tied up in trust. It was not tied up in LLCs. It was not hidden away. It was totally exposed for any shrewd attorney to come along and take. If, for example, he was at fault in a major car accident. But he was trying to save money on insurance. And so he just got the cheap, I saw it on TV, give me that real cheap price. Yeah, don't give me any extras, bells and whistles. Look, there's a few things in life you don't buy cheap. You don't buy cheap parachutes. There's other things that you shouldn't buy cheap that I probably shouldn't say on the air. And you should not buy cheap insurance, right? These are things that you just don't do. Insurance is not something that you can buy when you need it. You can only get it when you don't need it. Kind of ironic, isn't it? You can't buy it when you need it. When you need it, you can't buy it. So it's important that your plan looks proper. And so I helped him by boosting his auto insurance liability limits and then raising his deductible because he had plenty of money in savings to cover a higher deductible. And it kind of came out as a wash, but he was so much more protected. And those are the types of things that we have to keep in mind if we want to get ahead financially. Think about it this way. When you walk into a football game and you watch the offense and you watch the defense playing, the offense is fun to watch, aren't they? They're passing the ball, they're running around, they're going for touchdown throws. But it's not the offense that wins the game. It's the defense that wins the game. Offense will fill up a stadium, but defense will win the game. And therefore, it's vital that your defense is structured properly. And that's a very important part of the early stages of our 5 levels of financial freedom, making sure that the moat is built, so to speak. I've been seeing a lot of this lately. If you see a lot of the new houses that are being built by some of the big mega millionaires, there's a revival of moats. People are beginning to put moats around their houses. Why? They don't want the ruffians breaking in and stealing. And a moat, throw a couple crocs in there, crocodiles, and guess what? You're going to keep most riffraff out of your house. And that's why they're building these moats, and plus they also look cool. But in the old days, they built those before they built the castle. And the reason that they built the moat before they built the castle is because they didn't want anybody coming in and stealing. They wanted to make it hard on them. So many people today, friends, they build a beautiful castle with no moat. And then after the castle is extremely high and beautiful and pristine, and once it gets robbed a few times, they suddenly want to build a moat. But oftentimes the destruction and the pillaging that goes on by the thieves that break in and steal cause a great destruction of the castle. So they have to rebuild the castle first before they go build the moat. Here, what I'm saying to you is this: build the moat first, then build your castle. Right? You build the moat first, and then you build your castle. You start with a moat. You begin by creating your defense. Then, once your defense is in place, it's time to begin your offense. Now, let's talk about level 1. Level 1, if you look at these on our page, by the way, you can go to ftmdaily.com/5 levels, and you'll go to the page where you can actually read these and kind of go through them. I think level 4 and level 5 are still a work in progress. We have most of the material there, but there's not a whole lot of elaboration on them. But you can still get a lot of information on this page, ftmdaily.com/5 levels. But if we look at all 5 levels, Level 1 is abbreviated as build an emergency reserve. Now, that's what we're going to talk about here in just a couple minutes. The second level is, we'll talk about this next week, is asset, income, and life protection. So there's your moat. There's your big defense. Then, level 3, in order, build and diversify financial reserves. Level 4, build and diversify investments. And then finally, level 5 is advanced investing, speculative investing. And as we've said before, usually the area that most people want to go to immediately. They want to start trading penny stocks. They don't have any money in the bank. They don't have a will. They have bald auto insurance. They have no life insurance. They have no savings. And yet they want to start trading penny stocks and take on a tremendous amount of debt. Now, I'm all for taking those risks. If you don't take risks, you're never going to get anywhere. If you do what you've always done, you get what you always got, so to speak. I believe in taking risks, but it's important that we do it in a commonsensical way. So we're not going to begin trading penny stocks or trading options or getting involved in speculative type of investing before we lay our foundations. And what are our foundations? Well, probably the most important foundation to think about is your charitable giving plan. Now, I can hear some of you saying, what? Charitable giving plan? Level 1? Absolutely. The very first step of any solid financial game plan is to create a charitable giving plan. Now, I can understand that some of you don't quite either A, understand why that would be the case, or B, even agree with it. But let me build my case. I believe personally that money is a test. Money is placed into our lives for a very specific purpose. I don't know why some people are born into abject poverty on the other side of the world and never have a chance to get ahead. I don't know. I don't know why I was born in this country and have all of the wonderful benefits that I have and the opportunity to get ahead. I don't know how all that works. That's cosmic. That's handled by the divine. I don't get it. It's above me. But here's what I do know. The money that comes into our hands, the money that comes into our lives, is not there by mistake. That, in fact, in many ways, it is a test. Now, if we go even further, and I bring in the spiritual concept here, because if you're new to the show, I do like to talk about the Bible occasionally, especially when it comes to money, because it has over 2,000 verses on money, wealth, and possessions. So it's very relevant. And when we think about the money that's been placed into our lives, we realize that most people, regardless of their spirituality, want to have satisfaction and joy from the money that they have or the resources that they have. Most people don't want to be the only beneficiaries of their own financial wealth. They want to share the resources with others that they love. They want to share the resources that they have with those who are less fortunate, those who don't have enough to feed themselves. They want to help with causes that they support. Why? Because it brings satisfaction, it brings joy, it brings happiness. And so it's a noble desire to want to leave the world a better place than when we entered it. And so if we have resources in our lives, and then we never ask the question, why do I have these resources? Why were they given to me? And what do I want to do with them? Then we kind of forget the whole reason that we're on this planet, because it really is a test. The money that's been placed into our hands is a test. It's a test. How will you handle the money? Because I believe the Bible, when it says that the love of money is the root of all evil, all sorts of evil, I realize that I don't want to love money. I love the things that money can do, but I don't love money itself. And money can be used to build hospitals. It can be used for great things, and it can also be used to build weapons and bombs. So money itself is amoral, but how we use it is where the morality steps in. Our use of money, I truly believe, identifies and exposes our incentives. It exposes our incentives. If you want to know what a man values, take a look at his checkbook. See what he supports. See what he finances. See what he spends his money on. And you'll quickly find out where his heart is. You'll find out what he's driven by. And so I say all of that because of this simple reason. Our first step in the 5 levels of financial freedom, the very first step of level 1, is to create a charitable giving plan that will help us define what is truly important to us. Now, we've provided a worksheet for you to go through and answer on our website. Again, if you go to ftmdaily.com/5 levels, and you can just put the number 5 levels, and just go through it. It'll just lead you right through, and you can go through page by page. And you'll get to the charitable giving worksheet in level 1. And when you open that up, you'll notice that it asks many different questions of you that will be very thought-provoking. And some of those questions include, what percentage of your income would you like to be able to give away on an annual basis? I don't know about you, but when I turn on my TV, I look on the internet and I see what this world has become, my heart breaks. So it's a heartbreaking world. There is so much evil, there's so much anger, there's so much pain, there's so much wrong with our world. And if I can do anything to alleviate the pain of a child, if I can do anything to alleviate the pain of a broken person who needs help, I want to do that. I don't want to do it because I can pat myself on the back. I want to do it because it's the right thing. And if we begin our quest for wealth accumulation without thinking of anyone else, but just thinking of ourselves, we will be infected with greed. We will be infected by a worship of money itself. And I tell you one thing about money. It's a great servant, and it is a terrible master. Now, what we want to do when we talk about our charitable giving plan is we want to decide up front what our goals and plans are. Do we want to give away $1 million over the course of our life to help certain types of needy people? Do we want to give away a certain percentage of our income every single year? Some people simply default to the fact that the Bible says 10%. They say, well, I give my tithe. And that's fine. But that needs to be your decision. That needs to be a decision that you make. And you'll notice as you go through our 5 levels, it's challenging because what has to be done is that you have to make the decision. At no point in our 5 levels of financial freedom do we say, you must buy life insurance, or you must buy long-term care insurance, or you must make a will. What we simply do in the 5 levels is we say, if you don't do this, this is what's going to happen, right? And therefore, you have to be an adult and be willing to take on those repercussions if you choose not to take action. I'll give you an example. You remember Terry Schiavo? Terry Schiavo, who was a terrible story. Lady who was in the hospital. Husband wanted to pull the plug. Parents didn't. Whole 9 yards. It was just a terrible, terrible thing. Now, I'm not going to blame Terry Schiavo for her own, tragic situation. However, I will say this. Had she taken a moment and filled out a free piece of paper and filed it with her local hospitals, which are called advanced healthcare directives, very simple to do. You can get them online, download them from your state website, fill them out, send them to local hospitals, and it says this: if something happens to me in a car wreck and I am in a vegetative state, pull the plug. Or if this happens, don't do this. Or, you tell them what to do. By not doing that, Terry Schiavo left it in her family's hands. And at the moment that her family needed to be comforted, they were instead having to be at each other's throats saying, well, I think that she said this. Well, no, I know she told me this one time. Well, why don't you clear that up? Fill out a piece of paper and file it. And it's done. It's free. But it's a lack of planning. And when we fail to plan, we set ourselves up for disaster. So it's little things that make the big things. It's all the little things that add up. And it's those things that we'll be talking about in our 5 levels. So the very first thing that you'll see as you go through our 5 levels is this emphasis upon a charitable giving plan. The second step is to create what we call a go bag. I won't spend much time on this. We actually have a video we've made, and I show you my own go bag. It's a 72-hour survival kit. And I remember I was speaking at at a Christian conference. Somebody asked me to speak at a Christian conference, and I did. And the guy who was running it gave me a hard time because I had mentioned that people should have a go bag. They should have an emergency kit in their car. They should also have one in their house in the event that their house burns down. They can grab the go bag. It's got all their pictures in it, all their file documents and everything. It's in the bag, and you run out the house. You got it. That's what this go bag is. And I remember this guy gave me a hard time. He said, why are you telling people to have that? Why are you telling them to have 3 months of food and water supply? That's scare tactics. And this is a problem, I believe, unfortunate problem, that the people of faith in the faith community oftentimes have so much quote-unquote faith that they don't even make plans. They don't even take the simplest steps and precautions and measures. And whenever he told me this, I thought to myself, you've got to be kidding me. You've really got to be kidding me. You're the one who is telling people, he was a Christian minister. You're the one who is out telling people that the Antichrist is coming and that Obama may be the Antichrist and that there's all this turmoil that's coming. But don't worry, don't get any food or water. You won't need that, right? Basically, it's a very schizophrenic message. Oh, the world's coming to an end, but you don't need to buy an extra can of food. Now, you can go to the opposite direction of that and get very bizarre. You got these people who are telling you to buy canned food, freeze-dried food, and, have it for years and years and years and years and years, and excessive amounts. But instead, we're talking about just simply being prepared. And so the second step of our 5 levels, as you'll read through, is to create a go bag, 72-hour survival kit. And the third step is, as I mentioned, to create a 3-month reserve of food and water. We also have a video on this. Jennifer and I, my wife and I, we have a video we created to show you how we do it. We don't really spend a lot of money on those freeze-dried foods or the military replacement meals or any of those types of things. Instead, we simply buy more of what we already eat and simply rotate. We have a rotation system. I don't really want to be eating canned corned beef, or something that I just wouldn't normally eat, and I only eat it whenever there's an emergency. I'd rather have the things that I like. I just buy more of it, and I keep it on hand. And if we ever have too much, which we don't because we use it, but if we ever had too much, we would simply give it away to a local food bank or something before it expired. The next step in level 1 is after you create your 3-month reserve of food and water. By the way, these are in order. Is we begin to set up a systematic savings plan. This is huge. Create a systematic savings plan. So vital. And this can take the form of simply having 1, 2, 3, 4, 5% taken out of your check each and every week or paycheck period and placed into savings. Now, I've told you about our profit principle before, but I'm just going to briefly tell you what it is. The profit principle is something that totally blew my mind. It changed my life. When I first started trying to save a percentage of my income, this was years and years ago, and I remember how difficult it seemed. I said, I can't save money. I barely make ends meet right now where I am. And this was, I was very young. I was probably just about 20 years old, and I was really trying to get ahead and save money. And I had the hardest time doing it. And something would come up every month to prevent me from putting money back in reserve. And it was the profit principle that I learned. I was reading through the Bible, Proverbs 14:23, and there was a verse in there that said, in all labor there is profit. And that phrase, in all labor there is profit, kept rolling around in my mind. And I knew what profit was. Profit is the amount of income that you have after all of your expenses. It's the net income, so to speak. And it was at that moment that I discovered the profit principle. In all labor, there's profit. Really? Well, many people go and they give up their labor, but they don't have any profit to show for it. The profit principle simply says this: an individual's profit from his labor or work is equal to the amount of money saved. That is, profit equals savings. This profit principle literally blew my mind. I realized that each month that I did not save any money from my paycheck was a month that I did not earn a profit. Now, how many people would go and work for zero profit? Small business owners go and they're dependent upon their profits to survive and thrive, why should you view your job any differently? You would never agree to work for a job without earning a profit. And as I said, many millions of Americans do every single year, because what they do is they work and all of the money is spent before they even get it. They don't even think about saving it. They've already spent it. They've already given it away to credit card companies. They've already given it away to corporations. They've already given it away to Walmart. They've already given it away for the big screen TV. They've already given it away for the brand new car payment. They don't have any money to save. But here's the thing. The saving is the profit. Because if you work all month long and you have no money in your savings, how much profit did you earn? None. None. So profit equals savings. Are you currently making a profit from your labor? Or are you giving it away to corporations who have deceived you into believing that you cannot survive without all of their stuff? Well, after you make up your mind that you're going to earn a profit from your labor, regardless of, come hell or high water, I'm going to earn a profit from my labor. I'm not going to let the corporations take every penny of my labor. I'm going to keep some of it. Well, what you have to determine is, how much are you going to keep? And many times we bite off more than we can chew, especially at the beginning of the January, beginning of the new year. You know, people say, oh, I'm going to jog a mile every month or every day. I'm going to jog a mile every day, or I'm going to stop eating, candy, or we come up with these really big, bold declarations. Well, ideally you want to save 15% every single month, but that's a really big commitment if you're not currently saving anything at all. That's like saying you want to live in a mansion when you live underneath a bridge, right? I mean, you got to slowly baby step get there. So let's start with 1%. If you're not saving anything, if you have no profit at all from your current labor, if you're working a job and you are putting no money into saving every single month, then A, you have no profit from your labor. You're working basically for corporations, and that's it. So if you want to change that, just dial it up to 1%. Just say, I'm going to begin to save 1% every single month. And then maybe 2%, maybe 3% after that. Every month, maybe make it a commitment. At the beginning of the year, here we are in January, it's the very beginning of 2014. Let's make this year the year that you actually earn a profit from your labor. By the end of the year, you could be saving 15% of your income. But you begin with 1 or 2. Maybe you're already saving 15% of your income. If you can save more, that's good. But I think 15% should really be the absolute goal for most people. If you go to China, you find they're saving 30, 40, even upward to 50% of their income. And the reason is that they don't have any social safety nets. I mean, not the way we do. If they don't save, guess what? They're going to be out on the street when they get older, unless Junior wants to take care of them. And so they don't have the same social safety net that we do here in America. So in many ways, the Social Security system and our 401ks and one of these different things are wonderful benefits, but they also deceive us, don't they? Because we often find out when we get to retirement that they're not enough, or they're barely enough. And they deceived us into thinking that we didn't need to save very much. And the truth of the matter is, you and I both know that the retirement crisis is real. We don't want to get to retirement and not be able to enjoy the fruit of our labor. And we don't have to if we will take proper steps. So you can read all about the profit principle and all that. Again, ftmdaily.com/5 levels. I encourage you to go through all of level 1 this week. We'll talk about level 2 next week. The final step of level 1 is to build 2 months of liquid savings. So let me explain what this means. Your goal is to get to 15% of saving every single paycheck period, every single month. That's what we should say. Your emergency savings reserve, at this point, we want to drive it up to a place of about 2 months of our gross income. So if you're currently earning, let's say, $3,000 per month, then your immediate goal before you do anything else, including investing, including doing anything else, is to get 2 months of liquid savings put away. So if you're earning $3,000 a month, you need $6,000. That's 2 months, equal to that in your savings. Now, we're going to leave it in dollars, but when we get to level 3, we're going to diversify them. We're going to add some foreign currencies. We're going to add some gold and silver and all of that, but we're always going to be saving 15% of our income, always. And that 15% is going to go into that savings pool until that savings pool gets full. And then what's going to happen is our 15% we're continuing to save. Once we fill up the savings pool, then we're going to let that 15% flow into the investment pool, and we're going to build investment. But you have to have a good amount of savings to be a good investor. Good savers make great investors. Poor savers make poor investors. Why is that? Well, we'll talk about that in an upcoming session. But I really urge you to go over to our website, ftmdaily.com/5 levels. Learn all about how you can take control of your finances in 2014. Do it with our 5 levels of financial freedom. We've made it easy for you. All right, ftmdaily.com/5 levels. Now, in the bullpen, we have warming up Tom Cloud. Let's head over right now and get our precious metals market update.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
First of all, Happy New Year to all of our listeners, and we appreciate y'all's support during the year, and we're going to continue to try to bring as much information to you as we can in a complicated world of precious metals, which is changing all the time. But I want to start out today explaining to people, as we get questions about the value of gold compared to the world investment markets, and through a good friend of mine at a brokerage firm, he was able to come up and find out that at the end of the year, the U.S. stock market was worth $17 trillion. The bond market, both domestic and foreign, was $70 trillion. And the domestic cash hoard around the world where people keep their money in money markets or CDs was $10 trillion. And, of course, gold is only about $2 trillion. So we're talking about, of that $97 trillion, gold is less than 2% of the investments in the world are in gold, and the rest of it. And our listeners have been fortunate enough to see the last 13 years, or the first 12 years of the 13-year bull market, what has happened when people move out of bonds, when markets are moving up, and when people are out of stocks because the valuations are not there. So now you fast forward, all the way back 13 years ago, the Dow is about 3% higher today than it was 13 years ago, while gold's gone from 256 up to over 1,200. So there's been no comparison in which has done the best. So we want people to realize that we think gold is headed back to at least 5% of the world assets, which if it does, it'll produce a price of well over $2,500, where it'll double the price of gold if gold goes back to 5% of the value that we had back in 1981 at the last height of the market. There's been an interesting study put out by Bert Doman, and Bert has spoken all over the world. He spoke in December at an L.A. conference and presented his case. And this is not a gold person. This is a cycle person that looks at cycles. And he showed that literally over the last 500 years that gold has a 20-year cycle down and a 30-year cycle up. We are 13 years into that cycle right now. And what has been interesting, over these 500 years, or about 19 different cycles, gold will go up and then it'll drop an average of 43% from its top to its bottom before it makes the big move. Now, if we go back to the one that ended in 1981, gold had gone from $35, it gone up to 400s, and then it dropped down 50% before it went up 8 times to 850 in March of 1981. This market we're in right now has had a 37% decline since October of 2012, and we think it could decrease a little more, or we may have already seen it. But here's the important thing. The next move we think will be 8 times up, which will put it around 10,000 numbers that you're seeing out there, and we're only 13 years in to this bull market of 30 years that's been going on for 19 different times. So this is very important that you always get a quietness and a drop before you get the very big move. Further proof of that, of course, is the Federal Reserve notes that Jerry Robinson and I have talked about so many times when Jerry and Jennifer came and visited us at St. Simon's Island, Georgia, where we live. I was right next to Jekyll, where the Federal Reserve Act was done in 1913. And we're now seeing that the dollar has decreased 97% in 100 years. And we know from world history that not a single currency in the history of the world has survived that went off a gold-backed standard. And the U.S. dollar will not be the first. And we really look for acceleration as things begin to fail during 2014. We look for all kinds of problems with the Obama Health Care Act. We look at major problems in Japan. Germany's banks are way underfunded. I think this will come out in the first quarter. We're seeing political turmoil in Thailand, Sudan, and other places that is really good for gold, but certainly bad for the world. So I really think it's a quiet before the storm. It's hard to tell people the sky is falling and them to believe after we had this pullback in 2013, and it did catch me by surprise, the severity of it, but certainly it hasn't changed one iota, one thing on the bull market in both gold and silver. And then I want to close up by talking briefly about palladium. I keep hammering and hammering and hammering and asking people to diversify their metals and pick up palladium. In 2013, we saw gold go down 25%, silver 33%, and we saw palladium go up 3%. So if you just diversified some of your gold and silver or your new purchases into palladium, with the severity of the mining problems in Russia and the labor problems in South Africa where palladium comes from, and the pickup in car sales last quarter, palladium once again could be the number one metal in 2014, just like it was in 2012 and 2013. We still have a tremendous deal on COMEX palladium bars, and if nothing else, buy you one or two. Just get in the act of getting you some palladium, because there's going to be some severe shortages in the physical palladium market over the next 2 or 3 years, and quite frankly, I think you'll even see it this year. So I continue to hammer it, and very few of you are taking advantage of it. You're continuing to buy the other, which long-term I think you're going to be fine. But it also is a great time. Platinum looks good too, but if you don't have either one of them, I would urge you to buy palladium first. And then lastly, I'll mention before I give my phone number is if you have rare coins, another down year, and we just urge you to call and talk to us about getting those rare coins, because the collector base is continuing to go down, and you need to get it converted before the next move up in gold, silver, and palladium, which we think will start any time. So you want to talk about that. And then lastly, if you don't have precious metals in your IRA and want to get them, I urge you to give us a call, and we'll walk you through how to have a precious metals IRA in precious metals, gold and silver, because you do have to have a custodian, but we can help you and be your broker in the transactions. So if you have money laying there that is in cash and needs a place to go, it's probably a great place to diversify your IRAs by getting a precious metals IRA. For those of you that don't have our phone number, it's 800-247-2812. That's 800-247-2812. And if you're not getting our email blast, you can sign up for that at ftmdaily.com and go to the Precious Metals button. And we keep your name confidential and never share it with anyone, but we send out a couple articles a week and sales and updates and buy and sell signals on metals when we think it's time to exit or time to get in. So if you're not getting that, it's certainly something you should try over the near future. Once again, we're looking for an exciting 2014 and hope to be of help to you. This is Tom Cloud with this week's Precious Metals Market Update. Signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Friends, it's no secret that the U.S. economy is in dire straits, but you don't have to watch this unfold in fear. You can protect yourself and your family with Jerry Robinson's best-selling book, now in audiobook format. Get the complete, unabridged, and revised version of Bankruptcy of Our Nation by Jerry Robinson, available in a brand new audiobook. We have had numerous emails pour in from listeners just like you, requesting Jerry's book in audio. Whether you want to listen in the car, at the gym, or on your iPad, we've now got you covered. Get the entire book for only $24.95. That's right, over 12 hours of Jerry Robinson's economic and financial education and practical strategies for only $24.95. Inside the audiobook, you'll hear 21 income streams you can create both now and in retirement, specific ways to inflation-proof your investment portfolio using our PACE philosophy, and the 5 levels of financial freedom that Jerry has personally used to build true wealth. Friends, you cannot afford to miss out on this information. Get Jerry Robinson's brand new audiobook, Bankruptcy of Our Nation, right now at ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy.
Hi friends, Jerry Robinson here. Many of you know that I have been running several successful online businesses for years. And one of the things that I like about doing business online is that it's cheap. In fact, anyone can get started simply by purchasing a domain name and a web hosting plan. But how exactly do you get started? Well, just go where I go, dirtcheapwebhosting.net. That's right, dirtcheapwebhosting.net. It does not matter what you're looking for because they have it all. Domain names as low as $1.99. Web hosting plans as low as $3.99 per month. And you can even start your own online store for as little as $9.99 per month. And if you need help building your own website, just use their free design wizard and you can be up and running in no time with your very own beautifully designed website. Friends, it's time to get online. Start a blog, start an online business, start something. Log on now to dirtcheapwebhosting.net and get your own website set up right now for just a few dollars per month. dirtcheapwebhosting.net. Everything you need to get started online, only cheaper.
With this week's Trigger Trade Report, I'm Jennifer Robinson. Well, it's been a couple of weeks since we had a weekly radio show, and so I want to update you on several things that have happened in our trigger trading portfolio. Well, we have sold out of 7 positions, and here are some of the highlights. We sold ticker symbol STX for a 16.6% profit. We sold ROK for 2%. We sold SLM at a break-even position. We also sold ticker symbol SID for almost 6% gain, and ticker symbol FB for just under a 5% profit. Now, we were stopped out of one stock, which is ticker symbol AUXO, for a 9.5% loss. And we currently have 4 stocks that are still in play in the market, including ticker symbol DAL, up 6.5% from its trigger price, and ticker symbol PKG, up just over 3%. And we are still awaiting Jerry's trigger price on 8 stocks. Trigger Trading is a service that we provide all of our FTM insiders, in which they receive a stock trading idea every single day of the week, including trigger price, stop loss price, commentaries, and daily status updates. You can learn more at ftmdaily.com/trigger trade. That's ftmdaily.com/trigger trade.
Jay Perrone, certified financial planner, here with the idea of the week. This week we'll take a look at how an oven maker could help your portfolio in 2014. We'll take a look at an innovative industrial products company that has explosive growth opportunities for the year ahead. I recently just released my top 10 stocks for 2014. To find my top picks for the year, I literally started with over 7,000 companies and narrowed my picks down to just 10 companies that I believe will do well in 2014. I started with an exhaustive list of moral and financial criteria. I got down to the top 10% of companies that I felt had good outlooks for 2014, and then I did a whole lot of research and analysis and narrowed it right down to strong, successful businesses that I feel have lower risk and higher return potential. One company that has been a part of our Contrarian Strategies portfolio since June of last year, they make cooking, warming, food preparation, and packaging equipment to commercial, industrial processing, and now residential markets. You may think this is a boring business, but when you see the huge profits this company's been raking in, that's pretty exciting. When it comes to fast food restaurants, have you ever wondered how they cook the food so fast? There's one innovative company that's cornering the market as a supplier of high-tech ovens in the fast food industry. The company I'm referring to is the Middleby Corporation. Ticker symbol is MIDD. The company operates 3 profit centers: the Commercial Food Service Equipment Group that manufactures cooking equipment for restaurants and institutional kitchens, the Food Processing Equipment Group that manufactures equipment for the food processing industry, then the Residential Kitchen Equipment Group that manufactures equipment for the residential market. The strength of the company is its management team. Its current management team took over in 2001 and began to reposition the company by getting rid of its non-core businesses and instead focusing on building scale within the fast food industry. Through the 2000s, the company acquired numerous companies and quickly built their portfolio to include baking ovens, packaging equipment, light-duty cooking, speed cooking technology, and many more product innovations. Then last year, the company made 2 extremely important acquisitions. They acquired Viking Range, which is a leading manufacturer in the high-end residential cooking equipment field, and then they also acquired Cellfrost, which is a commercial refrigeration and food service products. Both of these companies should be hugely profitable for Middleby over the years to come. The Viking Range is going to give the company exposure in the home construction market, and the Cellfrost purchase will help Middleby gain excellent exposure into the emerging markets, especially in India. The bottom line, the company's products are in high demand, coming from new restaurants, replacements, menu changes, and also now in the home construction and emerging markets. The stock had a good run in 2013, and I believe the stock will continue to grow in the double digits. Middleby is a good buy up to $265 a share, and I expect it to hit at least $300 to $325 over the next 12 months. Again, that's Middleby Corporation, ticker symbol MIDD, worth a closer look. This is Jay Perrone, certified financial planner, signing off for the idea of the week. We'll see you again next week.
Well, where has the time gone? You believe it's already been an hour? We're already out of time, friends. I want to remind you, by the way, that we're going to be coming to Las Vegas in February to the Liberty Mastermind Symposium. So those of you who are out on the West Coast, I want to let you know we'll be out there. On the East Coast, we'll be out in Orlando speaking in March. More details on that coming soon. But want to welcome all of you to come along and join us. We'd love to see you there at any one of those speeches or the others that are coming up in 2014. As always, I leave you with this final word, this time spoken by Plato when he said, "The beginning is the most important part of the work." It's 2014, friends. Let's make the best of it. Remember, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next weekend. God bless.
All of the information contained on Follow the Money Weekly Radio is strictly for informational and educational purposes. The views and opinions of all guests, including our sponsors Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of Jerry Robinson, FTMDaily.com, and or Robinson Media Group LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Remember, never do your financial planning through podcast or by radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.